The best Roth IRA conversion strategies for tax efficiency. And most of you overpay tax and you don't put tax with investing or your 401ks. So how do you use your Roth? When do you convert? So you have the best tax strategy. So let's get to it. Why a Roth conversion is one of the single best tax strategies you could ever make, but you have to do it at the right time with a tax strategist who actually can do the math, because you will pay tax on the conversion. Number two, how do you actually time that conversion so you pay the least in tax? Because it's going to couple with other investments that are going to have to come in and you're going to have cash to do it. And number three, why self-direction beats the traditional IRA models and all the park and pray financial stagnant firms all day long. So first, let's talk about a Roth and its conversion. A Roth conversion means you're going to move money from a pre-taxed account into a tax-free one. So I did this recently. I have a 401k and now I have a 401k Roth. So I took a portion and moved it. So there's a timing to it that we're going to get to, and we're going to get to the details of it. The way it works is you're going to pay tax now on your terms and in the timing that your tax strategist is going to really provide for you. When you actually have a good year, you have a good cash flow year, so you have the cash to pay the tax. And when I talk about moving to true self-directed, I'm talking true self-directed. See, most of the financial firms, they'll say you're self-directing, but you're self-directing only into the assets that they provide. Like Fidelity has self-directing, Schwab self-directing, Fisher self-directing into their products, only into Schwab products, only into Fidelity products, and not into alternative assets. When we say self-direct, we're talking self-direct, meaning you, not an advisor, are going to make your decisions. The way we handle that, because I'm not licensed, is I have a bunch of licensed alternative financial advisors who can teach you the difference between a REIT, no tax benefit, or actually owning the real estate. Investing in gas and oil on the market, like Chevron, Shell, Exxon, etc., or own the gas and oil well, actually own the capital working interest of the well. So we have a lot of different alternatives, 52 in fact. When you talk about true self-directing, you can do hard money, you can do notes, gold, silver, cryptos, cattle, horses. I mean, there's so many things when you truly self-direct. So let's get to it. So I'm going to read a list actually of the Roth conversions and why these are absolutely the single best move. So number one, the middle class, you want to leave your IRA alone, let it grow, deal with the taxes later. If you're a millionaire, you want to convert. You want to start moving on a low income year when you have the least amount of taxes going to be owed. You want to convert then. So earlier I said when you make a lot of money, you want to use your non-Roth model. When you don't make a lot, you want to use the Roth model. So I have both. I have a 401k and a 401k Roth and a straight individual Roth. So I contribute based on my income year and based on the tax year. So when you put money into a Roth, you've already paid tax. So once it's in, whether it's a 401k Roth or an individual Roth, it grows tax-free, tax-deferred for the rest of your life. So on low-income years, when you have a good tax strategy, you may want to start doing some of that conversion. If you don't, and I've seen a lot of people do this. I used to work at Chevron, so I watched them do 30, 40-year careers. They have these massive 401ks, millions of dollars. They're going to pay tax as they take it out. And at 70, you have a minimum required tax. You have to take it out. And no matter what it is at that time, the economy, politics, the administration is going to tell you, you pay tax at that time. So that's the downside of using a 401k as one of your only assets. And so many of you put so much money into your 401k pre-tax as a tax move because you have a high income. But then when it comes later in life, you end up overpaying a lot in taxes. So just be mindful. Again, why you need a tax strategy for tax efficiency is a CPA is typically an historian. They're going to record what you did. They're not going to give you a lot of strategy on the investing side. So 401ks, Roths, real estate, how to invest, how investing affects your taxes. That's a true tax strategist. Most of you don't have one. So when's the best time to convert? On low income years. So when you're having the lowest amount of income, you want to start converting some of your 401k over to 401k Roth. I did that, like I said, many, many years ago. And then some of you, if you just keep escalating your income, you're going to have to make some decisions tax-wise. Now, if you actually did some of the conversion, you can offset some of that tax you're going to owe because you're going to pay a little bit of you're not going to really pay a penalty, but you're going to pay the tax on it because you're moving it from a pre-tax to an after-tax account. You can supplement that, though, by investing in other alternatives, direct real estate, gas and oil, water rights, mineral rights, aviation, a whole variety of different investments that will affect your taxes and actually offset it. The other way to do that is your corporate structure. If you actually have a C Corp, an S Corp, an LLC, a variety of entities, then you have really three choices. It's how you make the money, so you can activate the greatest deductions, which includes vehicles, which include allowances, housing allowances, all sorts of allowances, how you handle this qualified money, you call it retirement accounts, and then how you invest. All of that is going to make up a very precise tax code for you. When's the best time to convert? On low income years. So why you need a team is you need a tax strategist, you need a corporate specialist, trust, you have taxes with estate tax, you've got a lot of taxes across the scope of your life, and most of you only use a CPA for a tax return, just to prepare taxes. Now, if you're enjoying this, we're going to be here on this channel talking to higher net worth people, those who want to wealth build, those who truly want a legacy and pay the least amount of taxes, because taxes honestly can be a precise estimate. Now, if you're here, I want you to subscribe to the channel, click the notification button, be here 5 days a week. And this is family friendly. So a lot of people will say, well, how's my 5-year-old, 8-year-old, 10-year-old? Because they're going to have to pay tax at 18 years old. So you want to start putting this conversation, just if it's in their background, you want to put it in. So those of you who truly want to self-direct, I've talked to 3 or 4 different people already today. Self-directing, with most people, they think it is in Schwab, Fidelity, like the traditional firms. And it's not. Like I said, it's only going to be their products. And they're going to tell you you can never take it out as a loan. You can't take it out to buy real estate. You can't take it out to buy cattle or horses or another asset. When you truly self-direct, and there's only a handful of companies in the world, in the country for the United States IRAs. In Canada, there's only 1, maybe 2 that I even recommend to do some of this. But true self-directing means you decide. And you can bring it all the way down to a checkbook level. So you could write the check for a rehab, say on a commercial property. You could write the rehab for a mobile home park. You could actually write the check to buy an RV. There are so many things that you can do when you truly self-direct, but you need a team. Most of you are lacking a team, and you're lacking a system, and you're lacking the integration. So for those of you that find this interesting, I'm going to give you the first 3 chapters of the Millionaire Maker book. Read it, fill out the gap analysis, call our office 775-588-9200. Let's do a gap. Where are you? What do you want? How we can help you in a full integration of your plan, and let our tax teams tell you when is the best time for you to convert your IRA to a Roth. If you have any questions, go to askloral.com, ASKLORAL. Ask a question, make a request. We'll be back tomorrow.